Welcome back, traders. Welcome back to the channel. Welcome back to the Matrix trading community. I'm your host, Morpheus, and I'm going to help you dive into stocks and options, help you trade with clarity. This is not financial advice, and I'm not a financial advisor, just sharing some educational insights that have helped me and hoping that it will help you. So if you find this helpful, please subscribe, like the video, and please do your own research. With that being said, let's jump right into today's video. I have in front of us here a US 500 15-minute chart tracking the SPX 24-hour session overnight. And I'm just going to highlight some of the things here. I posted in the plan before the bell. Let me know you're alive. This is what I posted in my Discord before the bell around 9:15, 9:20. Usually when I'll come out with my plan because obviously we can get movement, some pretty significant movement. Anywhere from 9 a.m. to the open. So the SPX day trade plan for August 29th, 2025, the context was we closed at 6501.86 after testing 6508 as a high. So our key levels of resistance 6501 to 6508 and support from the overnight 6477. As you can see here on the chart, we basically had our high, our close, and then we had consolidation, Asian session, pretty tight, not a lot of liquidity. London session, we got a nice sell dip down to this 6477 level, and that sets up our liquidity for my plan. Really simple. And then I come out with a few different scenarios. So bullish break above 6508 on volume, post CPE there's a long entry as a target, 6520, 6530, stop below 6500. Bearish rejection fails at 6501, 6508 and drops below 6477. Short entry target being 6460 to 6450. Stop above 6509. Of course, range play can play between the levels, fade extremes, long near 6477, stop 6470, or short near 6508, stop above 6510. And of course, we're going to monitor the VIX always for an indication of whether we should be buying the dips or selling the rips. All right, let me get this off of our screen here. So there's the 15-minute US 500 chart, and around 8:30 you can see we got some red pills, and this was telling us that VWAP and RSI was diverging, and so price is going up, and once we get these signals here, it's usually a good indication when in trend that we can short the market for some continuation. And we did, in fact, get a lovely flush right off the open. Now, how do we trade this? I'm going to show you how we traded it and how I look at it. Here is the SPX proper 5-minute chart, and I have below a contract 6475. This is 6575 put 0 DTE. I'm going to show you what was actionable in my mind, what some folks took, what I took, and what I didn't do. So you can play 5-minute opening range. So if you get momentum, rejection of that 6501, we got a gap down here. So 6508, 6501, we have a 5-minute bearish candle printing right off of the open. This is an actionable trade. I don't love trading the open. My favorite day to trade the open is on Thursdays when it's a gap fill. Thursday, highest probability. I don't love trading off the open on a Friday. I'll be honest with you, I don't love really trading off the open unless it's very clear setup. In my mind, there wasn't a a great um, there wasn't a whole lot of conviction right off of the open. So I was waiting for things to set up, but this was absolutely an actionable piece of price action here. You can see right off the open, I have these contracts up below us. So those 6475 puts. And the reason I picked that strike is because that's one strike below our key support level. So 6477 is our support. So if we're going to get a move below our key support, I want to play an at the money contract generally. I like playing in the money, at the money, out of the money in some cases works well and they're cheaper, but I feel more confident and convicted when I can buy in the money contracts. I like to actually play spreads a lot of times where I'll buy in the money, and as the price moves in my direction, I'll sell the next strike out of the money, creating a zero risk, zero cost spread. I'll get into that in another video. I'm going to go over spreads because I think it's a really good way to mitigate risk. And I think once I think a lot of people that are not aware of what that can do for you, it can really be eye opening. And the biggest thing is it eliminates theta when you're able to trade spreads. But that's for another video. So in this video, I just want to talk about, we got this break below, rejection of our key level here, and the 5 minute opening range is just like the 15 minute, just like the 30 minute. We're looking for a break below the close of the 5 minute opening candle. So we did get that here, a test here. This is probably I would say the most actionable if you're going to trade the open, in my opinion. If you look down at the contract below here, that lines up with that candle that retests the 5 minute opening range, you're talking about an open of $8.50 for this 6475 put 0DTE. And on this candle here that flushes down, that hits a high of $13. It closes at $12.06. So, had you taken the retest of this 5 minute range here on this wick, you get in at $8.50 and it pushes down and it closes at $12.60. That's a great trade. But as far as what I'm looking at and what's more of a high conviction and A plus, if you want to put it that way, setup is this candle here opens at 6483 and it opens near there's not a big there's not a big wick off of it, but it definitely flushes down, and when it closes at its low here, okay, near its low, so there's not a lot of buying that's going on here. It closes below our key support level of 6477. So that in my mind, there's a light bulb that goes off and it's saying we're breaking key support. And we're not just breaking key support with, a candle that flushes down and then pushes back up. We're breaking it and it closes near its low. So at the end of this price action, there's not a lot of buyers here. And you can see here the spread is tight on the next candle. We're leaving a bearish fair value gap behind here. That's highlighted with this red area here. And this candle here that pushes back up, I'm waiting. I'm waiting for this candle to close to validate this bearish fair value gap on the 5 minute. At this point, I'm watching the ticker, I'm watching the countdown on this candle, and as it hits zero, I'm placing a buy order to buy 6475 put 0 DTE, and the price is on the open of that candle is $13.30. It immediately pushes down and tests this level here. If you look if you look to the right here, this pushes down and tests 64.66. Now, if you're just looking for a scalp, that's a fantastic scalp. You're talking about $13. Oh, the candle opens at $13. It tests $17, closes at $16. You're talking about $3 or $4 a contract. You can make a living on that. Okay. And this is timed, repeatable. This is a really good setup in my perspective. I really like it a lot. Now, the other thing that I want to talk about is, this candle's closing. So the candle's closing near its low. This candle's closing near its low. So there's a trade already here. I got in on this, and I actually I held this because I was waiting for our 10 a.m. 30-minute opening range to set up. I had some conviction now for the downside that we would potentially break this fairly quickly. The VIX was rising, and we are rejecting off of our key, what was key support now has become resistance. So as we're pushing down here, and as I have in the money contracts at this point, I'm anticipating a flush down below opening range low. We get the flush. Again, we are potentially printing this. You can see this shaded area here is the 5 minute bearish fair value gap, and this is what's known as the silver bullet. Now, on this candle close here, you still don't know that this is legitimate, but there is this take profit one here, which is 50% of this range here. So as we flush down here, I'm anticipating that we're most likely going to get some continuation, at least to this 64.55. Now, the target on the plan was 64.60 to 64.50. So 64.55 made a lot of sense. And by the time we hit this take profit one, I'm out of the trade here. And I'm out of the trade here. I think I sold those at 25. They hit 28 and they closed at 26. So you're talking about 100% trade, off of this key level from the plan here with this conviction here. You're talking about $13 down to $28. That's over 100%. Fantastic trade. I mean, it's already a good trade as you approach, this 10 a.m. candle. But once I get here, listen, could we get continuation? Sure, we could. But we had a big move off of the open here. You're talking about, from Thursday's close to down to here. You're talking about 50 points. So the market needs to digest and breathe. Another thing I just wanted to touch on here was, this is, let's say that you didn't take this, this trade here. Totally fine. I actually preach this to folks trying to like learn consistency, because waiting until after 10 a.m. is usually the best scenario. Kind of waiting for all the chips to fall. You have to have really, really high level execution when you're trading from 9:30 to 10. After 10 a.m., it becomes a little bit simpler in my mind. But that being said, let me just show you what the highest probability 30-minute opening range trade was. So after this candle closes here, this is validated. So this is the silver bullet after 10 a.m. And now we know that we can use this as a pivot for the rest of the morning at the very least. As you can see here, it actually, price didn't get back above our silver bullet for the rest of the day here. Okay, so this was obviously significant. That becomes resistance, and I suppose you could have just kept shorting that all day, but that is a different video. So this is the 30-minute opening range. So leave this bearish fair value gap behind. As we retrace back into it, you are entering on these candles here. Okay, these candles here, and you're setting a stop above our key pivot if you want, above this candle, above 64.75, 64.77 technically, but basically you're going to try to grab the retest of this level here. Okay, now there's other indicators. If you look, obviously we have all sorts of tools. We have the squeeze, and we have ready aim fire here, which is telling us, this is a good spot to get out of our puts. And then obviously we're going to get a retest here, and then we flush back down. So this is the if you want to put a percentage on it, like the 82% win rate trade here, and the 30-minute opening range, 5-minute silver bullet bullish fair value gap retest, and you're entering here. This contract was the 64.75 was let's see, on this candle here, it opened up at 22. You're talking about 19, low of 17, and then as it pushes back down, so you're entering here and you're going to either target low of the day, um, which is 64.44. So you're basically getting in at about 64.60 and trading it down to 64.45, something like that. But you get this move here. So let's say you get in on this. Okay, $18 opening at this candle here. This thing flushes down and hits $32. So again, a great trade, A plus in my book. And then the rest of the morning, the rest of the day, there's stuff that you can trade in here. Sure, there is, but it's not ideal, and I don't like trying to, you know, um, figure out every single move that's going to happen for the rest of the day. This is very range bound, not surprising uh, on a Friday before a long holiday weekend. So really, in my mind, the best momentum of the day was here, and then you just kind of chop. And yeah, you can play mean reversions back to EMAs, or the bottom of the opening range, or the fair value gap, and you can of course short your resistance. But in the way that I look at things, I'm trying to find just a very specific moment in time when I have a higher probability of catching some type of momentum. So that's pretty much all I kind of wanted to cover today.